So today's topic, we're going to be talking about if you are a buyer taking advantage of super low interest rates, how can you win? Mario, what are some of the tips that you share with the buyer in winning when we know each house may have 10, 11 offers? Not each house, but certain ones.
Thank you for asking me the question. One of the things that I always tell people to do, and it's sometimes it's not all about numbers, it's about hitting the emotional chords in the sellers, right? And one thing to do, you can do to do that is write a personal letter. I recommend doing that. Like once you walk to the home, just kind of see like what you love about the house, like if you can relate to any of the stuff that they have, and just building those little relationships, those little things that you guys have in common makes a big difference. So like the letter will be like no more than a few paragraphs. It would say something about like what you love about the house, something sentimental, not too sentimental, and then like talk about like your job and job security and stuff like that, because all those things are really important. And this sometimes I ask them to put like a picture of themselves. So like words are nice, but like you have an actual picture, that's even better. So that's like my biggest booster, I think, that makes the difference. Obviously this other stuff.
I'm glad you brought that up because I just submitted an offer on Sunday and there was 11 offers and my client did win. And the listing agent mentioned that out of the 11 offers, only 2 people put handwritten notes.
Dang, are you serious? Yeah, it needs to be, yeah, it makes a big difference.
And they
explain that to me.
That no matter what our offer was, because the letter was so good and personal, they were probably going to go with her offer.
Wow.
Explain that to me. So is the handwritten note to the selling agent or to the seller? I mean, go into more detail with that for me.
It's to the actual seller. So the buyer is writing a personal note to the seller.
I'd love to ask, so when you guys are talking to your buyers about writing these letters and what should be in them, are you talking to the selling agent beforehand?
I think that's really a profound question, just because, you know, you could think about it as far as 5 love languages. If I give you a gift and if that's not your love language, it doesn't help. So talking with the sellers is very important. One thing is timeline. Some sellers want to be out of the house super fast, and some of them need time to find a new house. So you can think, oh, you can make a lot of assumptions. The seller wants to move super quickly, so let me give them a 2-week closing deadline, and then they are sad because that doesn't work for them. So talking with the listing agent to find out what is important to the seller is super, super important. Yeah. Do any of you reach out to the listing agent to talk to them about the buyer that's been pre-qualified?
Kind of you to ask. I mean, guys, you can jump in anytime, but I'd say that's one of the key components to a successful offer. I mean, certainly the borrower needs to be qualified and so on, but actually last week I made 2 calls to selling agents where we actually connected, no voicemails left, and the feedback I got was, wow, this is really helpful. It's so good to know that the piece of paper that's been handed in is worth something, that the buyer's done their due diligence. It's an opportunity to share about, from my perspective, you know, what makes the borrower so wonderful. And the selling agent has said, lenders don't do this enough. And it really helps when it comes time to make a decision, to know what the process is going to be like and know who you're working with.
Yeah. So you had mentioned that you would reach out to the listing agent. Are you explaining to them the difference between pre-approval and pre-qualification? Because I think a lot of people are not clear on that.
I know for myself, I try to. So with the way that I run things is that I qualify a person initially, and a qualification is just you make $5,000 a month. I've pulled your credit report, your score works, you qualify for this. However, we want to get them a little bit stronger. So I asked them at that point, within the next 48 hours, I'd like to have some support documentation, which would be your income and your asset info. And it's really simple. I call it the 222s. I think others use that same terminology. The 222s. Last 2 pay stubs, last 2 bank statements, last 2 W-2s. If you get me those 6 pieces of paper, that takes you on a whole new journey from pre-qual to pre-approved, because now we have something behind it. And then the cherry on the top is to go ahead and send it off to an underwriter. So now you have a loan commitment. So that's what we try to do as lenders, to make sure a person isn't just qualified, but they're truly approved.
Right. And I'd love to know from you guys, I have some buyers that have been looking at some of these hot areas where homes just, they don't even have pictures taken and they're sold with multiple offers for way over asking price. And like, I've got a guy or many people right now with commitment letters being written, really competitive offers. Are there other things that we can do to stand out? Do those commitment letters mean anything? You can break that down however you like. I have so many questions.
So another thing, I guess I'll have to give away one of my secrets today.
I know, it's terrible.
If you get in the mind of a seller, a purchase agreement is basically contingencies. So as many contingencies you can remove, the more secure they feel. So the top thing is price. We've already talked about being emotional can impact whether that's important. The next thing is the future of the process. So as a finance person, I think the home inspection and the appraisal are the hardest parts of the process that are going to come in the future. But just talking about the repair home inspection part of the process, if you are an advanced buyer, not a first-time home buyer, but advanced, you can you can buy the property as is, meaning that the inspection will be for informational purposes, and you're just going to take on whatever they find. Now, if it is a situation in which there's too much, you still can ask to be released from the contract. But for an advanced buyer, letting the seller know that you may not, that you don't care what needs to be repaired, you're still going to move in, they're very concerned. We pick a number and say that they will not ask for, let's say, the first $500 worth of repairs. So that way the seller knows that they're not going to be nitty gritty about the very small things, because a home inspector, you pay them $400, $500, they're going to find a lot of things. I once had my home inspected to help an inspector get his certification. And I was terrified by the things that he found in the home that I was living in. They weren't really urgent things, but he, found stuff. So everything on the home inspection report doesn't need to be addressed. So considering that, how can I remove that contingency where the seller will feel more comfortable has been a game changer for some of the offers that I've written.
So yeah, with the appraisal, this is the thing. Appraisal is the bank, and I say this to everybody that's buyer and seller. I'm like, the bank is not going to give you money to buy a home that's overpriced, right? Mm-hmm. It has to appraise. So like when you're listing a home, you got to be reasonable. Now, when you're making an offer, you also have to be reasonable, because that seller and that agent knows about the appraisal problem. So like if the property is listed for like 200,000 and the market value is going to be around 200,000, if you offer 220, it more than likely is not going to appraise. So like you have to take that into consideration. So like instead of asking for more money, let's see if we can do remove other contingencies or make the offer better in other ways without having to pay more. However, if you're buying it cash, it doesn't matter, right? Or if you put a contingency in there and say, hey, my offer is 220. If it appraises under 220, then I'll pay, X amount of dollars over the appraised price. I've seen that too. But yeah, there's a bunch of different ways you can kind of play with the appraisal. But the important thing to know is a bank is not going to give you that money to buy a house overpriced. Now, at that point, you can like get creative and see what you can do with the funds that you do have. So let me ask you a question real quick for the lenders. So with the pre-approval letter, their credit score is pulled at that point. A pre-qualification, there's no credit pull.
No credit's pulled on pre-qualification, but so this is how I've always done. Pre-qualification, credit is pulled. So let's use the 620. That was the norm back then. 620 got a 620. But you tell me you make $5,000 a month, and you tell me you got $12,000 in the bank. So I'll put all those numbers in and say, oh, you'll qualify for a house for 180. And so they're excited. They're running out to a realtor with only thing that's been substantiated was the 620 credit score. Nothing else has been substantiated. Now you send me your bank statements. You got $2,000 in the bank. You send me your checks stubs, and you make $2,500 instead of $5,000 a month. Now you don't get to the next stage, but you as the realtor show 20 houses already.
Yeah.
Is that good lenders care about the buyer and the seller. They care about every person in that transaction. So if you, the buyer, are nervous about having your credit pulled, if you're nervous about turning in documents, the only thing that's happening there is you are selling yourself short, and you are not allowing yourself to be protected by people that want to look out for you and make sure you get to the finish line. I don't mean it's rare to get there if you hide things, but it's a heck of a lot harder if you don't just do the due diligence up front. And a lot of homeowners right now aren't opening their houses to buyers who have not been pre-approved. So there we go. There's my preaching for today.
Love it. Love it. If I could jump on something Reggie said earlier, I loved it. If I could, Jackie, when he said everyone thinks we have more control than we really do. Oh my goodness. When it comes to appraisals, we only have the ability to request it. We're not allowed as lenders, Reggie, myself, or Katie, to call the appraiser to discuss anything with them when it comes to value. We don't know. So it's really important that everyone is on the same page when it comes to appraisals. A couple little Easter eggs to throw in there that may throw people off. If a person is buying a home with an FHA product, which is one of the popular products today, there was FHA and Fannie Mae. We talked about that in another show. But if they're buying it with an FHA product and the home was already under contract at one time, had an appraisal done, and it was an FHA appraisal, here's something most people don't know. That appraisal will stay with the property for 6 months. That's a very important thing to know. So if the contract falls apart and the seller wants to offer more, they want to have a higher value, or maybe it appraises for higher, that won't happen. We have 6 months. On top of that, if you're an FHA buyer and you're buying a home that has just changed title less than 3 months, less than 91 days ago, FHA says, not going to happen. The person has to have owned the house for at least 3 months. So that's another thing we run into from time to time that becomes an issue. And I'll let Reggie or Katie, if you want to jump on something else along that line, but that's something just to let everyone know. Those are important things, especially because FHA is so prevalent.
So what I want to add one thing to that, and I'm with Katie. I want to commend this group. I sent out an email to Lee John. I said, hey, I need help on the Earl. That's a VA loan. Call me on Saturday, help me out. And this is what loan officers do. Good loan officers are not afraid to help other loan officers or reach out to other ones. So I want to just commend the group for being so strong on that. So thank you.